Jonad Trust here. In this video, I am going to break down the pro investment strategy for residential, commercial, industrial, and raw land real estate. So let's get into that, right? So we're going to first start with residential real estate, right? So the US residential real estate market in 2025 is expected to see a 9% increase in home sales and a 2.6% rise in home values, with mortgage rates stabilizing around 6.3%, right? So inventory is improving, especially in suburban and secondary cities, driven by remote work trends and affordability. The multifamily housing remains strong, with vacancy rates projected to decline due to robust tenant demand and high homeownership costs, right? So the market is characterized by stabilization and cautious optimism, with steady rental demand and rising home values. Top professional strategies in that regard is to buy and hold for long-term gains, right? Acquire residential properties and hold them to benefit from long-term appreciation and steady rental income. So this approach leverages the projected rise in home values and ongoing demand for rentals. Now, there is house hacking as well, right? Which is purchasing a multi-unit property, live in one unit, and rent out the others. So this strategy helps offset mortgage costs and builds equity while providing rental income. There are short-term rentals like Airbnb investing. So invest in properties in high-demand areas for short-term rentals. This yield, it can yield higher returns than traditional long-term rentals, especially in tourist destinations or cities with strong travel demand, right? There's the BRRRR strategy, BRRRR. So that is the buy, rehab, rent, refinance, and then repeat method, right? Which is where you buy undervalued properties, renovate them, and rent them out, refinance to pull out equity, and repeat the process. So this accelerates portfolio growth and maximizes leverage. There is debt snowballing. So that's where you focus on paying down one mortgage at a time using cash flow from rentals, then use the freed up funds to pay off, the next property's mortgage. This reduces risk and builds, wealth predictability. There's diversification across asset types, right? Don't limit investments to just one type of residential property. Diversify across single-family homes, multifamily units, and even consider REITs or real estate crowdfunding to spread risk and capture multiple market trends. Embrace technology, right? Use AI-powered analytics to market research, property management software for efficiency, and virtual augmented reality for remote tours and marketing, right? Leveraging tech can improve decision-making and streamlining operations. There's passive investment vehicles. So for hands-off investors, consider real estate investment trusts like REITs, right? Crowdfunding platforms or new products like compound real estate bonds, also known as CREBs, which offer fixed returns at about 8.5% APY with liquidity and no direct property management, right? Now, some strategic considerations for 2025 is location targeting, focusing on suburban and secondary cities, benefiting from remote work and affordability trends. Multifamily focus, right? With new supply dropping and demand rising, multifamily properties are positioned for lower vacancy rates and stable returns. The financing opportunities, like, explore private credit or alternative financing as banks retrench, potentially securing better terms and higher returns. In regards to risk management, diversify holdings, right? Maintain liquidity and stay informed on local market dynamics to adapt to changing conditions. Now, that was that was residential. Now let's get into commercial real estate, right? So improving fundamentals, right? Over 68% of industry respondents expect commercial real estate, that's CRE, fundamentals to improve in 2025, including better cost of capital and capital availability. You have sector preferences, right? Multifamily and industrial properties remain the most favored sectors, with retail gaining traction due to shifting consumer habits. Office assets face continued challenges but offer potential discounts for optimistic investors. There's investor sentiment. So 70% of investors plan to increase acquisitions in 2025 compared to the previous year, anticipating a market recovery and more competitive asset acquisition environment. Now, the core pro strategies for 2025 in this regard is the sector focused allocation. Industrial and logistics, right? E-commerce continues to drive demand for logistics and warehousing, with rental properties, or prices rising and vacancy stabilizing, right? So targeting high growth logistics hubs and last mile distribution centers can maximize returns. Multifamily, like the stable cash flow and opportunities for value add renovations, make multifamily properties a resilient choice, especially in high demand urban and suburban markets, right? There's retail positioning as a factor of this. So select retail assets, especially those anchored by essential services or in mixed use developments, that are benefiting from evolving consumer preference. 2 is the investment strategy selection. Here's a pro tip. Align strategy with your risk tolerance, capital availability, and market expertise. So value add and opportunistic deals require active management and sector specific knowledge, right? There's sustainability and tech integration. So sustainable assets, that's where investors are prioritizing environmentally friendly and high quality properties as tenants increasingly demand sustainable features. Upgrading to LEED certification or adding energy efficient systems can enhance value and attract premium tenants. Tech enabled management, so leverage data analytics, smart building technology, and digital leasing platforms to optimize operations and tenant experience. Geographic targeting, so top markets, you have Dallas, Miami / South Florida, and other gateway cities remain investor favorites due to population growth and business migration. Now, secondary markets, you're going to want to consider strong secondary markets for better yields and growth potential, especially for core plus and value add strategies, right? Capital structure and timing is as goes. There's interest rate navigation. So elevated and volatile long-term interest rates remain a primary challenge. So investors should structure deals with flexible financing and be prepared for rate fluctuations. There's first mover advantage. So with investment activity expected to recover by mid 2025, early movers may secure favorable pricing before competition intensifies. And there's alternative approaches, right? REITs and private equity funds for private investors, or those seeking diversification. Consider REITs or private equity real estate funds, which provide access to professional management and sector specific opportunities. There's specialty assets, so data centers, medical offices, and self-storage facilities offer higher yields and less competition, but require specialized knowledge. Industrial real estate now, right? That's the commercial. Now let's get into industrial, right? So target high demand segments, right? Focus on warehouses, distribution centers, and last mile logistic facilities, which benefit from ongoing e-commerce boom and supply chain reconfiguration, right? So consider specialized assets like cold storage and data centers, which are seeing increased demand due to changes in consumer behavior and technology adoption, right? Prioritize location and market fundamentals. So invest in properties near major transportation hubs, ports, and population centers to maximize tenant demand and rental growth. Analyze local employment trends, right? And vacancy rates and rent growth to identify markets with strong fundamentals and upside potential. So leverage technology and automation, okay? Seek properties that are equipped for or can be upgraded for advanced automation like robotic picking, AS/RS, that's smart building tech, to attract high quality tenants and boost operational efficiency. Monitor the impact of AI and prop tech on tenant requirements and property values, right? So you're going to also want to integrate sustainability, incorporate energy efficient systems, renewable energy, and green building certifications to meet tenant expectations, reduce operating costs, and take advantage of tax incentives from recent legislation, right? So sustainable features can also future-proof assets against regulatory changes and enhance long-term value. So strategic financing and deal, structuring. So carefully evaluate financing options as banks become more conservative. Consider bridge loans, private equity, and REITs for flexibility. Take advantage of 1031 exchanges and depreciation benefits to optimize after-tax returns, right? So you're going to want to be mindful of large wave of loan maturities through 2028, which may create acquisition opportunities from distressed owners. risk management and due diligence, right? Asset tenant, credit worthiness, and lease terms to ensure stable cash flow. So there's also a factor in rising insurance premiums and construction costs when underwriting deals. And you're gonna want to conduct thorough environmental and structural due diligence, especially for brownfield or adaptive, reuse projects. Now, the emerging trends and tactics are the adaptive reuse and brownfield redevelopment. Explore opportunities to repurpose older industrial assets or remediate brownfield sites, which can offer attractive returns but require expertise in zoning, environmental, and construction challenges. Portfolio diversification: use industrial real estate as a diversification tool within a broader portfolio, balancing core stabilized assets and with value add or opportunistic plays. There's active, asset management. So engage in proactive management to enhance tenant retention, implement tech upgrades, and drive NOI growth. Now let's get into, raw land and real estate strategies, right? So here are the key pro strategies, right? You can buy and hold for appreciation. So purchase promising tracts of raw land in growth corridors or near expanding urban areas and hold for long-term appreciation. So this classic strategy lets you benefit from rising land values and potential future development. There is target emerging trends, right? So that's where you identify regions with strong economic growth, infrastructure projects, or population influx. So acquiring land in these emerging markets positions you for outsized gains and demand rises, right? Prioritize water and mineral rights, right? Land and secure water rights or mineral resources is increasingly valuable, especially in areas facing water scarcity or resource demand. So these features can offer both appreciation and potential passive income. There's land flipping: buy undervalued parcels and add, value, such as clearing, subdiving, or improving, access, and resell at a premium. Land flipping is highlighted as a high profit, underrated business model for 2025. Now you can also diversify geographically and by asset type. So spread investments across multiple regions to mitigate local market risks, right? Consider mixing raw land with other real estate types like residential, commercial, short-term rentals for portfolio stability. Develop passive income streams, right? Lease land for agriculture, solar/wind energy, cell towers, or recreational use. These arrangements generate steady cash flow while you wait for appreciation or redevelopment opportunities, right? Reinvest profits. You can use gains from land sales or income generating leases to pay down existing property debt and acquire new parcels, compounding your returns over time. There's due diligence and risk management. So always conduct thorough research. So check zoning, access, environmental restrictions, and future development, right? Plans. So avoid landlocked parcels or those with legal complications. So that's what I have for you today. Please take a moment right now to hit that subscribe button and like button. If you appreciate this video and you want more videos like this, please let me know that right now by hitting that subscribe button and the like button. Also, let me know your opinion as far as each of these, strategies for, respective sectors of real estate. What do you think about each of them? Let me know in the comments section below. I appreciate your viewership. Stay safe and see you in the next video.